Good morning, MMTs. We're going to be talking about the SLV, but we're going to be also talking about the ZSL. And I will have someone explain this at what this means versus the calls and puts on the SLV Silver Trust iShares, which is this right here. So let's take a look at the two because it's still important. And the thing about it is, if I'm going to be buying this side of the market, MMTs, and that means that this has to go up to the top. If this capitulates on the opening bell, let's say we break below 35, because that's 35.50 is going to be that key area here, and we've been covering this for the last 2 weeks. We called it short about 2 weeks ago, this whole thing here, because all the hedge fund managers are in on it. So what? They're all taking profits. Margin debt selling is also involved here. 38.27 close, and when we break below that 35, what we're looking for in the trade management MMTs is where this started this gap down on the opening bell is what we call a capitulation gap, where they come down, they make that bottom. Once the bottom is in, that's the final straw when they're all out, whether that be today or whatever price level it may be. This side of the market, which is the bear side of the market, this side of the market is making money. Closing price 19.45. You can see the gap here on the bear. And I'll have an MMT explain what this is versus this momentarily. So we do have an MMT that is willing to tell you what this means and how we've been covering it. MMT, go ahead.
Yeah, you're basically looking at the bear and bull ETFs for silver, SLV, and the ZSL being the bear.
Okay.
And so they're pair trading ETFs. One is long, one is short. When one goes, one comes down, the other goes up, based on the valuation of silver and whether it's being sold off. Right now, it's being sold off because it put in a top and it's coming down. So the ZSL is breaking out, and the SLV is coming down. And when silver reverses, puts in a bottom and goes back up, ZSL will reach a top and will come down, and the SLV will put in a bottom and will turn around and go up.
Well, MMT Scotty, would it be safe to say that I could be long this one here, and I could actually short this one because it's shortable, and I could be shorting this at the highs, holding it all the way down, letting this one go all the way up. Then I can actually come over here and buy puts on the SLV that have been going up in value. These are weeklies right here that expire tomorrow. Then we have ones that go out further. We got the week after. We have some pricing. You got a 513. You got the 521s, of course. So the 521s also have a trade management. What's going to happen, MMT, is if I could sell short this if it made a high reversal, and I could go long this on a capitulation open, meaning that the highs capitulate here and the lows capitulate there, and I could start whipping trade management. Could I not, sir?
That's correct.
Which is
one
also
of several successful trading strategies.
Yes, but however, the public mind isn't going to act that way, and you know that, don't you?
Nope, not until it's too late.
No, because they don't know how to.
That's right.
It's not that they wanted it to be that way. You hear me? So the thing about it is the educational process is probably the most significant, important thing that people can get at SMF, just for the simple fact they're going to be able to wade through whatever comes their way, right?
Absolutely.
Headline events are turning. Capitulation gap down on this side of the market. A capitulation high short reversal. A capitulation buy. We're going to be monitoring it live. We've got some contracts that we're going to be trading as well. We're looking at the $35 call. When they strip out all that premium, we're going to put this in the mix. $35 call. And there might be some other ones that we put in the mix. We certainly have the list, and what we're looking for, just because these expire tomorrow, we're looking for the lowest wholesale bid as a market maker in this option relative to this capitulating its gap down and reversing. And all of my MMTs that are new, and all of my MMTs that are in paper trading status in the MMT trading division, please trade the bottoms of what I'm saying so that you're utilizing your experiences in these kinds of events. So basically, the $35 call we already have out well below the market, and we have some alarms set. And we're starting, you know, $1.25. If it breaks it, it goes to 75 pennies. They can even get down to 35 pennies in this name here on the bid, depending on the opening left elbow gap down capitulation. Learn what that means and how to get net long as an SMF market maker. And the gap ratio here and the gap ratio here, one's upside, one's downside. We're going to make a market because all the hype and all the volatility and lots of things going on, these things were extremely overbought. And we had called for a correction in the whole market, by the way. But there are trade management setups. So MMT, Scotty, are you going to enjoy watching this one today?
Absolutely.
Are you ready with the bid on the $35 call?
That's right.
Okay. Remember to hit cancel all just in case we have to drop her on down to 75 pennies. Okay? Fair enough? Well,
Absolutely.
let it open. Let's see which way the gap ratios play out. This is the silver play. We are professional market makers here. We have a professional market maker school. It's an apprenticeship school for 12 months. Get involved now. If you don't think you need it, well, then that's on you. But I do know you need it because there's nothing else out here like what we do. Come and see for yourself. Of course, you see it every day. Trade management setup, how to trade silver long and short, how to get short one, how to get long the other.